Test 1 2 3. All right, looking good. Audio looking good. Okay, this is episode 5 of the Dylan LeClaire show. I guess until said otherwise, still have yet to come up with a creative name. Busy weekend. The Bitcoin halving happened, came and went. Fee market bonanza. We're gonna cover all of it. We're gonna cover, also we're gonna dive into a little bit of the public miners. People are asking me why the fee market went crazy. I'll just give you a broad overview. We're not going to go too deep into it because I don't really care that much, but I'll just give you my take on how to think about it. And then also, we'll cover the Bitcoin market in general. Before we begin, obviously, I want to just give a huge shout to the guys at Theya, who very kindly reached out to sponsor my video content. Theya is a fantastic product, modular multi-sig, meaning you can plug in mobile wallets, hardware wallets. You can kind of pick and choose exactly how you want to compile this. It's Bitcoin security that, honestly, the user experience and user interface is so slick. Even my non-technical family members, I onboarded them before the halving, before the fee spike. I've used multi-sig for years, but I've never seen a product as slick as Theya. So theya.us/Dylan. There will be a link in the YouTube description as well. But make sure to check them out. They have consultations. You can see if it's right for you. And again, guys, you can plug and play exactly how you want to figure out your multi-sig or set up your multi-sig quorum. And multi-sig is definitively the best way to self-custody your Bitcoin. So theya.us/Dylan. All right, let's dig into this here. I'm going to pull up Clark Moody's dashboard. Bitcoin's price 66,700. The block height is 840,370. The Bitcoin halving occurred on block 840,000. Pretty historic, guys. Look at that. I mean, 37 Bitcoin in fees. What the hell happened there? Had a lot of people. I saw the timeline kind of going crazy, figuring out why this is, and we'll cover it. Right? We're gonna dig in. The most important thing to know, or not even to know, but just kind of why it happened, was the launch of a new token speculation. I guess it's called it's a protocol, but standard, I guess if you want to call it, called Runes. The creator of Ordinals, Bitcoin developer Casey Rodomore, came out with it, and came out outright said it's not unlike maybe the Ethereum protocols or standards or a lot of this stuff saying, hey, it's gonna solve world hunger, outright saying this is for speculation, this is for essentially gambling. And the best and worst parts about Bitcoin, the beauty of it is this is an open system, an open network. Bitcoin is FU money, and so if someone's willing to pay transaction fees to include transactions and stuff some data in an op return, that's Bitcoin. And so miners are definitely welcome to not mine certain transactions if they don't want to, but profit incentivized miners are going to take whoever pays them or whoever bribes them the most. So I like, honestly, I appreciate the honesty of Casey being like, hey, reminder to all the degens, runes, ordinals, inscriptions are a fun sideshow. Bitcoin is the main event. Stay humble, stack sats. So again, the reason that I don't go out and cover ordinals collections or runes or any of that stuff is because it's a sideshow, right? Bitcoin is the total addressable market for Bitcoin is the largest in the world. It's money. The money's broken. Bitcoin is fixing it, can fix it. That's my focus. But something like, why the intricacy of covering why the fee market is why, how it's developing or why it is how it is. That's why I'll cover it in the same way that, when I was writing Bitcoin Magazine Pro back in 2022 and 23, we covered a lot of the crypto stuff, is Luna and Celsius and all of the, an FTX, an FTT token, is that Bitcoin fundamentals, or does that have, is that covering the long-term case for Bitcoin? No, but if you're interested in understanding why the Bitcoin market is developing how it is, covering yield Ponzi's collapsing and crypto perpetual motion machines blowing up like Luna and UST, at least is important in the short intermediate term to understanding what's happening. So shitcoins on Bitcoin, is it the end of the world? Should we filter them out? Well, to be honest with you, I mostly ignore it. I don't really care. the filters have obviously been a failure. And, honestly, I think I welcome anyone to run any node implementation they want. That's the beauty of Bitcoin. Run Knots, Luke Dasher Jr.'s Ocean is ignoring a lot of this stuff, and I welcome that. I welcome that and champion that. I think the diversity of node clients is fantastic. That we should encourage it. But also, if miners want to include whatever they want to in blocks, especially if it's just the highest paying transactions, that's the economic reality. And so I've always been under the opinion, or my kind of mental model is that if Bitcoin is going to be worth immensely more than it is today, or more than it was 4 years ago when I kind of went all in on the idea, and kind of it clicked for me. And as I realized, this potential for $100 trillion settlement network, settlement on that open protocol is going to be extremely valuable. It's going to be it's going to be expensive. So I think, while, post-halving transactions were $100 or $200 per, just for a standard send or standard on-chain transaction, I think that was obviously, at least that fee pressure now is transitory, right? This protocol went live on, this token standard went live at the halving. But, I don't think, we're not there now in terms of hundreds of dollars to settle. But I think ultimately, again, if you think Bitcoin's going to be worth 100 times more than it is today, well, most of the world is not going to be settling on Bitcoin on chain, at least frequently, right? It's going to be a very scarce, valuable resource to consume Bitcoin block space. It's like the equivalent of a tanker ship crossing the Pacific Ocean or the Atlantic Ocean carrying, tons and tons of gold, right? With armed security. Right. But if you want, to send $10 or if you want to send someone Bitcoin for a sandwich they bought for you, there's Lightning, there's other second layer solutions, there's eCash. I think there's going to be other L2s that come about. There's custodial solutions like, the equivalent of a Venmo or a Cash App. So that's kind of how I think of it. Again, I don't think you have to pay any mind to all this stuff, other than I think this epoch there's going to be definitely alternatives demand for block space in the form of L2s and or quote unquote L2s. I think 99% of them aren't really L2s and are more of kind of like a liquid model where it's just a multi-sig and kind of a federation. A unilateral exit and entrance is like Lightning has in a decentralized network is ultimately, I think, the true definition of an L2, but obviously that's hard to implement. And so a bunch of people are trying to figure it out. We'll see if it happens, but I think Bitcoin alternative demand for Bitcoin block space isn't going away. And saying it's, disagreeing with it, thinking it's dumb, or just, whatever your opinion on it is fine. It's totally fine. It's understandable. If you think spam, stupidness, degeneracy, shitcoining, nihilism, whatever you want, that's fine. And I honestly agree with a lot of it. But it is here. So you can run a node that ignores it all, but it's still getting put in blocks. So if that, if that invalidates your Bitcoin thesis or is existential to you, I guess you got some soul searching, because it doesn't invalidate anything for me. My mental model of Bitcoin being immutable, absolutely scarce global money built on a permissionless settlement layer is still very much intact. The fact that someone's putting in transactions with data in the op return means nothing. And I don't really I think people that hate this stuff the most talk about it all day. So I think that's what I'm gonna cover on it now. Again, I'm never gonna go out there on my platform and say, here's an NFT collection or a ticker or for some useless speculative shitcoin, in the same way that I would never go out there and say, professionally, go bet on Bruins money line with all of your wealth. It's just like, that's not my stance. My stance is Bitcoin is the best money. So people are going to gamble. There's obviously a multi-billion-dollar gambling demand, as evidenced by, if anywhere you go in the US, you see this. DraftKings, FanDuel, all this other stuff. That's obviously happening in crypto. Is it irrational? Yes. Is it negative sum games? Yes. Can I personally stop it? No. So that's kind of my stance on it. In terms of its effects, here I have the year-to-date Bitcoin issuance, 24-hour moving average. You can see the halving right there. Obviously, there's variance and volatility, but right, that's the halving effect. And if we go out, if we zoom out a little more, oh, too much, and a lot of variance there too. But we're just starting to see kind of the halving. About to be 450 Bitcoin of new issuance a day. We're already there. So fees. So if you're looking at fees, I put a 12-hour moving average on this, but the fee spike was pretty outrageous, pretty legendary. I got 37 Bitcoin in fees. The next block came right after it, but 4 Bitcoin, 6 Bitcoin, 16 Bitcoin, 24 Bitcoin, 29 Bitcoin, 23 Bitcoin. Since then, if we go to the last block that was just mined, only 2.7 Bitcoin. But if we're looking right, like subsidy plus fees, it was 6.25 Bitcoin in subsidy before the halving. Now it's 3.125, 3 1/8 Bitcoin. So if we're thinking of hash price, meaning miner revenue per terahash, it's that fees have made up for a bit of the miner revenue, which has been obviously good for the miners. They enjoy it. If we take off this moving average here, we'll take it off log 2. This fee spike is pretty outrageous. Historic stuff. Right, just look at that. It's just craziness. Sorry, I didn't realize you guys couldn't see it. Pretty outrageous fee spike here. Just look. You can just see it eclipses everything. So, again, is it transitory? A lot of this stuff is going to boom and bust. And when I say boom, 1% of these things is going to go parabolic. The rest of them trend to zero. They're all negative sum games when you include fees. I think that's the essence of it all. So there will be various waves of demand similar to in 2023 with the JPEG speculation. But yeah, economic demand for Bitcoin settlement will continue. Speculative demand will vary and will come in waves. It doesn't change anything about how I view this thing. And ultimately, the only reason I half pay attention to it is just to understand its impacts on UTXO management. I have Bitcoin. Personally, I have. I've used Lightning in the past and still do on occasion. So all of these things are matter for the fee market, as well as the attention I pay to the public miners and the mining industry in general, as kind of a general analyst in the space. So if we're looking at total Bitcoin, if we're looking at miners fees, this is a great chart here. Miner revenue, percent miner revenue from fees. Vertical, right? And obviously it's come down a bit, but that's a pretty outrageous spike. To almost to over 80% of miner revenue from fees. If we put a moving average on it, this is a 24-hour moving average. 70% of miner revenue. This is just the day after the halving. 70% of miner revenue was from fees. Just craziness, right? So that's more than the block. That's more than the block reward. Haven't seen that in a while, right? So I think you're obviously going to see kind of the mempool, the backlog it's going to boom and bust, right? But obviously the miners like it. So I think this is just to stress, but just to beat the point home. I said this last time, and I forget exactly where I said it. But if you look at the last episode, I was telling you guys, said before the halving. This is before the halving, right? This was last week. And if you watched it and you caught it, appreciate it. And it would love if someone in the comments could just say, hey, it was at this timestamp, or find it. Or maybe if you want to share it to Twitter or something, that's great too. But I said, hey guys, the halving fees are going to be outrageous. You should consolidate your UTXOs ahead of time. So right now, I mean, like, look, the Bitcoin fees, it's like $10 a transaction. I mean, again, that's a lot compared to what it was previously. But at one point, this was 2,000 sats per VByte, which is crazy, like $200 for transactions, which, you know, having a low time preference is essential in Bitcoin. So, all right, let's, all right, what should I do first? Should we dig into the miners, or should I talk about the general Bitcoin market? We'll cover the general Bitcoin market first. All right, cool. So I'm going to screen capture, and I'm going to change to TradingView, if I can find it. TradingView, can I not choose TradingView? Hold with me, bear with me. Steady, lads. Oh, goodness. That never gets old. All right, we're going to move it to this screen, and let's see if we can... Great. All right. Here we go. All right. I can't see that, damn it. There we go. Okay. Oh, no. Not what I wanted. I'll work on the formatting, guys. I apologize, but we're just gonna send it. Can't even see the axis. Damn it! What's going on? Come on. All right. Well, whatevs. Can I move this? All right. Well, I'll just narrate it for you because the price right here is $67,000 or $66,700. Sorry, you can't see the axis. Too bad. Truly a shame. But you know, this is a nice couple of momentum indicators I like to look at. This is on a 4-hour time frame. We retested that 59 level twice, 59.6 over the weekend. You know, 2 separate pukes on war scares, but at the same time that also you have you know, equities 6 straight days of or not 6 6 straight down days. We're up over the weekend, so I think that's a pretty good sign. Oh, there we go. Okay, that works perfect. We can see the axis now. Yay. But I think that this is looking real good for the Bitcoin market here. Secondly, I guess we're just going to go back to my Chrome here. Bitcoin derivatives look great, guys. Looking really strong. Wow. Bullish. All right, so I'm going to pull this back up. Bear with me. All right. So, I mean, if we're looking on, put it on the 4-hour time frame. I know you can't see a lot of it, but so here's funding, and I know pains aren't great. I wish the pains were better. Unfortunately, I'll figure out the spacing of this all later on. But price grinding up. I mean, look at this, guys. We got the futures open interest is the lowest. It's not the lowest it's been, but it's in the middle pane here. It's nowhere near where it was. It was like 20,000 Bitcoin higher than it was the past couple months at 67,000. Look at the funding rate. Negative on this grind up. That means that spot markets are under the futures markets right now. Or I'm sorry, spot markets are above the futures markets right now. So here's This is similar to the funding rates. This is just a premium. Spot markets to futures markets. I mean, guys, look at that. And so I want to remind everybody that I wrote on, this is something I published with Bitcoin Magazine in partnership with their Unchained collaboration. Contributed just an article and kind of some market analysis. But basically I was looking at a couple things. Covered some on-chain stuff, said, hey, cost basis, on-chain cost basis. We've covered this in the last couple of videos. 58,000, 59,000. As for the level today, approximately 58,500. I wrote this on the dip, I forget. I think I wrote this, it was like a price of 62,000, and then I published it and it was like nuking. But saying that, it's perfectly natural to revisit that level in a bull market, right? To revisit that short-term holder cost basis. So here's a screenshot, I guess it was 62,800. And in terms of, I was looking at, in terms of points of interest for liquidatable leverage, 70K, obviously above 70K, but that 50K level. It's like, while certainly crazier things have happened than a 33% pullback, spot demand is likely strong from 50,000. The start of negative futures premium relative to spot markets hint at a pullback having already taken place. So, right, guys, it was already taken place, right? This is my cursor here. I know you can't see the bottom of the screen. My cursor here is April 13th. So this is like a week ago, a week and change. So the derivative market was already trading under the spot market, right? And so since then we've grounded up and we've wiped out a bunch of leverage. I mean, the leverage wipe already occurred. It's looking good. This is looking really, really good. And so I'll put the price in the bottom so you can see these two panes. That's a really, really strong sign. If I do this, all right. Just trying to see the frame in here better for you guys, but no worries. So this is looking really, really, really strong. Again, there's a lot of leverage that we can take out, and I'll show you another thing I'm looking at. Hopefully when I publish this, the price is still, so I can show you some alpha here. But here is here's the liquidation map. This is a 24-hour liquidation map. I mean, look, we're just hitting that demand side, so we might rip through 67,000 here on this stream. But see this? Look at this. This is a lick map. So there's a lot of good, there's a lot of juicy liquidations above these levels. And this is the one I'm going to put on a 1 month here too. That's pretty juicy, guys. I mean, obviously the 70K is where the meat is. But just looking good. If we get any sort of bounce in risk here, I mean, we have already seen a bounce in equities, but Bitcoin's going to rip here. This is a really great setup. I'm loving this. Held on chain support. I guess we'll see the inflows. One of the things I did want to cover that we haven't mentioned. There's been a pretty nice slowdown in the inflows, right? We've actually seen some, a lot of outflow days. Fidelity broke their inflow streak. Just a re-deceleration here. And I think that a lot of that was just, they got the initial starter allocations. I think a lot of this stuff is still being rolled out. But also 6 days of outflows in equities, right? Like I don't think anybody should be under the impression that Bitcoin's magically just going to decouple from everything, because the denominator BTC is USD. So if equities are selling off, if global risk is selling off, the dollar strengthening, Bitcoin should obviously sell off too. And a lot of times, like the last time Bitcoin sold off really heavy on the weekend is the only thing trading. So it makes sense. All right. So I guess we could talk a bit about miners. I think what I'm thinking is I'm going to talk a bit about miners, and then we're going to have a much, because I'm not going to really mention any tickers here. But I would be interested. Maybe we can bring on a guest to kind of do a deep dive on miners, different valuations, the stuff I look at. But miners relative to Bitcoin have just gotten killed this year. And I think, especially if there's any sort of second wave or, I don't think it's necessarily long-standing demand, but, the miners really will benefit, and they'll kind of, ease up some of the pressure they feel from the halving if there's any sort of, kind of sustained or increasing level of speculation and kind of some of these alternative uses of block space. Which again, I'm pretty agnostic to. I don't have any like miners I've plugged in myself. I own a small amount of them in a brokerage account as a speculative kind of 12-month sort of swing. But besides that, I don't really feel too strongly either way about it. But let's see what else. What else did people want to hear about? Okay, this is an interesting one. And I can't verify this, but someone said in response to me asking what would you like to hear about, they said, hey, would love to hear about Hong Kong ETFs, which have been approved and I think are rolling out soon. And David Bailey's belief that BTC whales will borrow against their Bitcoin and buy up the Hong Kong ETF. So the interesting thing, and again, I can't verify this, but unlike the US ETFs, which are cash settled, then the BTC nets up, but it's not Bitcoin directly in. There's kind of a convoluted process of market makers and all that. The Hong Kong ETFs are apparently in kind, which means you can put in Bitcoin into the ETF without a taxable event. And again, if that's wrong, please let me know in the replies. But interestingly is, and I think the reason that the ETFs are significant is that it's just kind of entrenching itself on the asset side of the balance sheet. I had a whole talk about this on, if you look up Dylan LeClaire, Baltic Honey Badger Riga, I talked about this. I had a 30-minute presentation on the effects of the ETFs last September 2023, and basically talked about this, right? It's not about, loving BlackRock or, saying that, they're any sort of savior or any of the TradFi institutions. It's about Bitcoin entrenching itself into the financial system on the asset side of the balance sheet against all these liabilities. And so it's a Hong Kong ETF. It's not mainland China. I think it's definitely significant. I don't think the spot flows will be anything close to what they are in the US. But if it is in kind and if you can put in Bitcoin into the trust without a taxable event, which I don't know, I can't verify this. It's an interesting thought. Then in theory, you can, this basically, you can plug it in. It's supercharged in the kind of the legacy financial system where you can borrow against your S&P 500 ETF. You can borrow against your gold ETFs. Bitcoin is obviously kind of in its own little nascent ecosystem with its own credit instruments for the longest time. Futures exchanges and all this of the like, and some collateralized Bitcoin lending. But if it's an in-kind Bitcoin ETF and you can plug it into the financial sector in Hong Kong, that's very, very much interesting. Someone said, Dylan, thanks for these videos. Hodling love. Appreciate it. I would love to hear your thoughts on second layer solutions you're aware of other than Lightning. Anything you personally find interesting. Really want the small guy of the world to be able to buy Bitcoin in the future. Great question. There's a ton of interesting stuff. A lot of it, again, I think it's marketing hype, but I think you guys should tune in and check out Alex Berger. He just joined. I think that's his last name. Geez, I hope I didn't mess that up. Alex, Berge, Alex, I don't know. Berge, not Berger. Alex B. But he just joined the Bitcoin Magazine team as an L2 guy. And Alex, I know Alex from 2021. This is when I first kind of met, crossed paths. He put out an excellent technical analysis of Ethereum and completely basically just dismantled all of it and, talked about miner extractable value and how centralized it was increasingly becoming and just basically tore Ethereum to shreds. And so he's came on the Bitcoin Magazine team to basically give an objective analysis of all of the quote unquote L2s of the ecosystem. So I think the jury's still out. A lot of these things have promised a lot and have not delivered, standard in crypto, but I'm interested to see what develops. I don't have a strong stance right now. Also, I would love to know, out of anyone listening to this on YouTube or Twitter, would it be at all of value to you guys to have this on like a podcast feed or RSS? Someone said Fountain, which is a Bitcoin value for value platform where you can stream sats. I'm open to it. I just a little bit marginally of extra work. So I don't know if that would be worthwhile or not. My opinion on ossification. Look, I think Bitcoin is monumental. I think it's extremely robust, and its resistance to change is one of the strongest features. I'm not pushing. I have zero interest in or I have not yet come out supporting a soft fork, or there's CTV and OpCat and a whole Enhance and a whole bunch of other stuff that people want to see. I'm not supporting any one currently, and that may change in the future, but I don't think ossification is the answer. Covenants, basically vaults with Bitcoin, and kind of having that additional functionality is a no-brainer. Every Bitcoin user should want that, and it helps scale Bitcoin. Essentially, like some of the stuff you can basically share UTXO. Lightning, you kind of share UTXO. It's a second layer abstraction, but with Covenants, you can kind of share UTXO. There's additional functionality. So not to get too technical on you, but the ossification crowd has it completely wrong, in my opinion. Bitcoin should move slow, should make sure we don't break anything, of course. And the base layer resistance to change is one of Bitcoin's strongest features relative to something like Ethereum. But no, I'm not an ossification stan. I think the people that think Bitcoin is perfect and think Bitcoin is complete and think Bitcoin never needs any new progress or development and thinks developers can only hurt Bitcoin are completely naive. Not naive, not to come out strong or to bash anyone's opinion. Yeah, your opinion's fine. But Bitcoin is software. There's constant improvements, tweaks, efficiencies, right? There's Bitcoin core maintainers that are constantly improving and tweaking and making sure that bugs are fixed, right? Bitcoin is software. Humans are required to work and develop software. Acting like this is a finished project when Lightning is still, and I know that Lightning's not Bitcoin core, but when Lightning's still under development, we still need to scale this thing to hopefully as many people as possible. I say 8 billion as just kind of it's everyone on the planet. Everyone on the planet won't be able to fit into the on-chain base layer. So we're going to have to scale this thing as efficiently and effectively as possible. Covenants are going to be a huge part of that, in my opinion. And so I'm not in the ossification crowd, but I'm still learning. I'm not the most technical person in the world, but I like to keep part in the conversation. Yeah. How about a segment on crypto memes? Always good for a laugh and add some fun to the mix. Can't wait to see the new video. Well, appreciate the comment on wanting to see the new video. No thoughts on crypto memes. I don't really care. Meme coins. Look, it's gambling, so it's not my stance. Joe Burnett with an insightful comment said, I've been thinking about what the optimal portfolio allocation may be post-hyper-Bitcoinization. I'd love to hear your thoughts. So essentially, in a world where Bitcoin wins, Bitcoin is the dominant global store of value, medium of exchange, and unit of account. Mostly when I present my view on Bitcoin, I'm like, look, this is going to be this is the world's best unit. This is the world's best store of value. That's all that matters. That's $100 trillion idea. But if we get that far, what's stopping it from becoming a unit of account and medium of exchange already? People marginally are already doing that, right? The world is far, far away from that, obviously. But if we do see a world where the most bullish, Bitcoin scenario is realized, what does portfolio allocation look like? And I think value investing makes a strong, strong comeback. Right now, we're kind of in this world where tech and, anything value investing has been crushed for years. And it's about chasing momentum. It's about chasing growth at all costs, right? Like, you're going to invest in Uber, which didn't earn $1 for years because all you need to do is pour more and more venture money at it, have it scale, users gain a network effect, and then it wins, right? That's not, that's not to say that the money is causing that, but the negative cost of capital, basically free and cheap money for the last decade, has warped a lot of incentives and has changed a lot of market dynamics. And value investors have been crushed, right? Look at any value fund. I mean, even Berkshire Hathaway would have done terrible had it not, gone into Apple in size in, I think, 2016 or 2017. When that Apple's like 50% of its portfolio now. So value investing has been crushed, but I think saving and money will very much have a larger role in this post-hyper Bitcoinized world. But investing will still be around. You'll be able to earn a return on your Bitcoin investing in great companies that have cash flows, have robust earnings and net income. Value investing will make a comeback in a world where the money is not perpetually debasing. Give a shout out to Hash Rate Index. Shout out to Hash Rate Index. They're great. They do some good stuff. You guys should check it out. It's a cool source for all things kind of Bitcoin. They have a bunch of different mining stuff. Good blog posts, data on miners, data on hash price, and it's free. So no affiliation, but they do some good work. All right. We've been going for 36 minutes. So look at this. This is crazy. Hash price just soars and then all the way back down. But they had some good stuff like ASIC price data, mining stock index. Just really, they do great work. Hash price index is awesome. Great team. So, I know I said we'd cover a bit more on the mining stocks. We'll do that. Let's do that next episode, or maybe I can bring someone on and we can really get deep into it. At a certain point, I'm not gonna. I'll have some more kind of interactive combos and not just monologue. But I think still in the early episodes, I'm kind of getting my thoughts out there, getting my process out in the open, showing you guys what I look at and what I view and how I think about things. But we'll do maybe more of a format, so a dialogue format rather than monologue. Again, want to just give a quick shout to Theya again, theya.us/Dylan, modular multi-sig. Check it out if you don't have a multi-sig or Bitcoin storage solution. Fantastic product on the iOS App Store. Smoothest interface and user experience I've seen. So they do great work. We will. I think we'll stop it there. Feeling pretty bullish here. Bitcoin's 66.6. Miners up on the day. I guess the last thing here. I know I said I'd close it out. Miners are up today, but still just week over week, month over month. You got Riot up 20%. Iron 10, Bitfarm 7, Marathon 4, Hut 15, SDIG up 30%, Hive 7, BTBT 9, CleanSpark 8, Wolf 12, Cypher 15. So big day for the miners, but they've been crushed recently. So let's see if it continues. That halving was kind of a narrative that drove a lot of sell pressure and a reality, an economic reality, but will be interesting to see the fee market dynamics from here. So cool. We'll stop it there. Please like, subscribe. It would mean a lot to me. I'm going to keep cranking out these YouTube videos. And also we'll continue to upgrade the production quality. So I hope this sounds good. I hope the video is good. I'll upload this to YouTube first, and then I'll publish it to Twitter probably the day after, just to pump the YouTube a bit. So cool. We'll talk soon. We'll probably will do 1.5 of these a week. Maybe we up the cadence if we start getting more and more traction. But until then, appreciate everybody tuning in. Peace.